Hey everyone, and welcome back to Investing Talk podcast. We're diving into a company that's been making waves in the market, Innoviz Technologies,
Oh, yeah, ticker symbol INVZ.
INVZ. And with their stock swinging between $2.12 and $3.14 in a single day recently, um, investors are definitely paying attention. What's got everyone so excited?
Well, I mean, you can't ignore a 52-week high of $2.71. That's a 114.74% increase over the past 6 months.
Wow, that's huge, especially considering the overall market's been down.
Yeah, it is.
And last week's jump of 18.45% is pretty eye-catching, too.
Right, so there's some short-term excitement brewing, but what's really interesting is whether this momentum can last long-term.
That's where their technology comes in, right? I mean, they made a big splash at CES 2025,
Yeah.
showing off their advanced perception software. It works with NVIDIA's Drive A GX Ornan platform.
Exactly. And remember, this isn't just about improving existing driver assistance systems. This partnership is aimed at accelerating the development of fully autonomous vehicles.
So they're aiming for that big leap from level 2 plus ADAS, like advanced cruise control, to cars that can truly drive themselves.
Yeah.
That's a powerful narrative for investors, especially those who believe in the future of self-driving technology.
It is. And that news from CES definitely played a role in the stock jumping 17.6% to $2.34 right after the announcement. Investors are looking for companies that are pushing the boundaries.
Okay, so we've got exciting technology partnerships with big players and a stock price that's been on a tear. Are there any reasons for caution, though?
Well, while Innoviz has had its share of wins, it's also faced some challenges. Their reported revenue is around $20.87 million, which sounds good, but they also have a negative pre-tax profit margin of negative 13,856.3%.
So not all sunshine and rainbows, then. I remember there was also some talk about Innoviz regaining compliance with Nasdaq's minimum bid price requirement. What was that all about?
That was crucial. Avoiding delisting is essential for keeping investor confidence. It signals stability, which is something investors value, especially in a volatile sector like autonomous vehicles.
It makes sense. No one wants to see a company they've invested in get kicked off the exchange. But getting back to the financials, what's the outlook for Innoviz?
Analysts are predicting a Q4 2024 loss of 14 cents per share. Not great news, but they are forecasting revenue of $5.86 million.
So a bit of a mixed bag. It sounds like the upcoming earnings call in February 2025 will be a make-or-break moment.
Absolutely. If Innoviz can exceed those expectations, it could be a major catalyst for the stock. But if they fall short, it could send the price tumbling.
Let's talk about some of the technical indicators you brought up.
Yeah.
I'm seeing a recent death cross where the short-term average dipped below the long-term average. That's usually not a good sign, right?
That's true. It can signal a potential downturn. However, it's important to look at other indicators as well. For example, Innoviz's short-moving average, the SMA 10, has actually been improving.
Okay, so there's a glimmer of hope there.
Yeah.
And the trading volume has been pretty high lately, right?
Yes, much higher than average. We're seeing 83,883,611 shares traded compared to the average of 4,673,829. This suggests that investor interest remains strong.
That's encouraging.
Yeah.
But I have to play devil's advocate here. The Relative Strength Index, or RSI, is at 70.4, which puts Innoviz into overbought territory. Doesn't that often signal a price correction is coming?
It can, and it's something to be mindful of. But here's the thing. It can, and it's something to be mindful of. But about 30% of fund managers think U.S. equities will be the top-performing asset class in 2025.
Oh, wow. So a rising tide lifts all boats.
Exactly.
Well, what about Innoviz specifically? What makes them stand out in this crowded autonomous vehicle space?
Lidar.
You're talking about those laser systems that give self-driving cars a 3D view of the world.
Exactly. And Innoviz is considered a leader in solid-state Lidar, which is a newer, more compact, and potentially more cost-effective type of Lidar.
So they're not just playing in the autonomous vehicle space. They're also innovating within the Lidar market itself.
Precisely. And that gives them a competitive advantage. They're not reliant on another company's technology. They're developing their own cutting-edge solutions.
And speaking of partnerships, their collaboration with Mobileye is a major win. That's like getting a stamp of approval from one of the biggest names in advanced driver assistance systems.
It is. And this isn't just about supplying Lidar units. It's a deep collaboration where they're working together to integrate Innoviz's technology into Mobileye's platforms.
So it's a strategic partnership, not just a supplier relationship.
Exactly. And that gives Innoviz access to Mobileye's vast network of customers and their expertise in the automotive industry. It's a win-win.
All of this sounds very promising. But at the end of the day, investors want to see profits. How is Innoviz doing on that front?
Well, as we mentioned earlier, they're not profitable yet. And their pre-tax profit margin is, well, let's just say there's room for improvement.
But they are still a relatively young company in a brand new industry.
That's right. They're still in the investment phase of their growth, spending heavily on research and development, building up their manufacturing capabilities, and expanding their sales and marketing efforts.
That all costs money, which explains why they're not turning a profit yet.
Exactly. But the hope is that these investments will pay off in the long run as they secure more partnerships, ramp up production, and start generating significant revenue.
And that's where that $80 million engineering payment they secured comes in, right? It gives them more breathing room to pursue their goals without having to dilute their shares or take on more debt.
Exactly. It's a sign of financial strength and gives them more runway to execute their strategy. But of course, there are still risks to consider.
Like what? What are some of the things investors should be cautious about?
Well, one of the biggest risks is competition. The autonomous vehicle space is getting increasingly crowded with established players like Tesla, Google's Waymo, and traditional automakers all vying for a piece of the pie.
So Innoviz isn't just competing on technology. They're also battling for market share partnerships and investor dollars. It's a tough landscape.
It is. And then there's the risk of technological disruption. The autonomous vehicle space is evolving rapidly with new technologies and approaches emerging all the time.
What if a competitor comes up with a superior solution that makes Innoviz technology obsolete? Or what if the whole self-driving car concept just fizzles out?
Those are valid concerns. It's a possibility, but I think it's becoming less likely given the massive investments being poured into this space by some of the biggest tech and automotive companies.
Okay, so competition and technological disruption are two big risks. What else?
Regulatory uncertainty is another major factor. Governments around the world are still figuring out how to regulate self-driving cars.
And changes in regulations could have a huge impact on Innoviz's business.
Absolutely. If a country decides to ban self-driving cars, that would be a major setback.
Yeah.
Or even if regulations become overly burdensome, it could make it harder for Innoviz to compete.
So investors need to keep a close eye on the regulatory landscape.
They do. And they need to be comfortable with the level of uncertainty that comes with investing in such a dynamic and evolving industry.
Speaking of uncertainty, can Innoviz actually deliver on their ambitious promises?
That's the question of execution risk. They've set some lofty goals, and investors are betting that they can achieve them.
But what if they encounter unexpected challenges, experience delays, or just fail to meet expectations?
That's always a possibility. Execution risk is inherent in any investment, but it's particularly important to consider with a company like Innoviz that's still in the early stages of its growth.
So what can investors do to mitigate these risks?
First and foremost, do your homework. Research the company, understand their technology, their market, their competitive landscape, and their financial position.
It's not enough to just glance at company reports and press releases.
Yeah.
You need to dig deeper.
Absolutely. Read industry publications, talk to experts, follow the news, and get a sense of the bigger picture. And once you've done your research, diversify your portfolio.
Don't put all your eggs in one basket, especially when it comes to a company like Innoviz that operates in a high-risk, high-reward industry.
Exactly. Spread your investments across different companies, different sectors, and different asset classes to reduce your overall risk. And finally, be patient.
Investing in a company like Innoviz is a long-term game.
It's not about getting rich quick. It's about believing in the company's vision and being willing to ride out the inevitable ups and downs.
So we've talked about the technology, the partnerships, the risks, and the potential rewards. But there's one big question we haven't tackled yet.
What's that?
Valuation.
Yeah.
How much is Innoviz actually worth?
The million-dollar question.
Is the current stock price a fair reflection of that value? Or are we looking at a potential bubble?
Those are the questions every investor needs to answer for themselves. And unfortunately, there's no easy answer. Valuing a company like Innoviz is more art than science.
So there's a lot of guesswork involved.
Yeah.
And different investors will arrive at different valuations depending on their outlook and their risk tolerance.
Exactly. So it's important to understand the different valuation methods that are used and to be aware of the limitations of each approach.
Okay, so let's break down some of those methods.
Sure. One common method is discounted cash flow, DCF analysis.
That sounds complicated.
It can be, but the basic idea is to estimate the company's future cash flows and then discount them back to their present value.
So you're trying to figure out what those future cash flows are worth today.
Exactly. And the discount rate you use will depend on how risky those cash flows are.
A higher discount rate means those future cash flows are worth less today.
Right. And the DCF model will consider things like revenue growth, profit margins, capital expenditures, and the company's cost of capital.
Okay, so DCF is one method. What are some others?
Another common method is comparable company analysis.
So you're looking at how other companies in the same industry are valued.
Right. You're comparing Innoviz to its peers based on metrics like revenue earnings and growth rates.
And then you use those comparisons to come up with a range of potential valuations for Innoviz.
Exactly. This method can give you a sense of what the market is willing to pay for companies in this space.
What about looking at how much other similar companies have been acquired for?
That's called precedent transaction analysis, and it's often used for early-stage companies like Innoviz.
So it's like looking at the market value of similar companies that have already been bought out.
Exactly. And it can be helpful when there aren't any publicly traded comparable companies or when the company isn't generating significant revenue yet.
So we've got DCF, comparable company analysis, and precedent transaction analysis. But no single method is perfect, right?
Right. Each one has its strengths and weaknesses, and investors should use a combination of methods to arrive at a well-rounded valuation. And it's important to remember that valuation is not an exact science.
There's always a degree of subjectivity involved, and different investors will come up with different valuations depending on their assumptions and outlook.
Exactly. The key is to do your homework. Understand the different valuation methods and come up with a range of potential valuations that you're comfortable with.
And then you can use that information to make an informed investment decision.
Precisely.
Well, we've covered a lot of ground today, from Innoviz's technology and partnerships to the risks and rewards of investing in this exciting but uncertain industry. But there's still one more piece of the puzzle to explore:
What's that?
the future. What lies ahead for Innoviz and the autonomous vehicle industry as a whole?
That's the big question, isn't it? It's a future filled with potential, but also uncertainty. So many factors could shape how things unfold, from technological breakthroughs to regulatory changes to consumer adoption rates.
Let's focus on Innoviz for a moment.
Mm.
What are some key milestones or developments we should be watching for in the coming months and years?
Well, those earnings reports will be crucial. We already talked about the upcoming February 2025 earnings call, but it's about tracking their progress over time. Are they meeting those revenue targets, managing costs effectively, and showing a clear path toward profitability?
Beyond financials, their partnerships will be key to watch as well.
Absolutely. The Mobileye collaboration is a major win, but are they securing other strategic partnerships? Are they expanding their reach into new markets? In this industry, it's all about building a robust ecosystem.
And what about Innoviz's next generation of Lidar technology? There have been some hints about exciting developments in the pipeline.
Keep an eye out for that. When those new products hit the market and how they are received could be a significant indicator of Innoviz's ability to stay ahead of the curve. After all, standing still in the tech world is like moving backward.
So we've got earnings partnerships and new products on our radar. What about the bigger picture? What trends are shaping the future of the autonomous vehicle industry as a whole?
One significant trend is the increasing affordability of Lidar technology. As the cost of this crucial component comes down, it opens up a whole new world of possibilities.
It makes the technology more accessible to more automakers, which could really accelerate the adoption of autonomous driving features.
Exactly. And that could lead to a sort of snowball effect where increased adoption drives further innovation and even lower costs, making it a more attractive option for everyone.
But affordability is only one part of the equation. Safety is still a major concern for many people when it comes to self-driving cars.
And rightly so. Safety has to be the top priority in this industry.
So what advancements are being made on that front? What should we be paying attention to?
Redundancy is a big focus right now. Having backup systems in place so that if one sensor fails, another can take over.
It's like having a co-pilot for the self-driving system. Makes sense.
And this redundancy goes beyond just sensors. It's about building multiple layers of safety nets into the entire autonomous driving system to prevent accidents.
That's reassuring. The goal is for self-driving cars to be statistically safer than human drivers. A lofty goal, but one worth striving for.
And we're making progress towards it. But safety isn't the only benefit of autonomous vehicles.
Think about increased efficiency, reduced congestion, better accessibility for people with disabilities.
Not to mention the potential impact on industries like logistics and delivery. Imagine trucks driving themselves across the country 24/7 without needing rest stops.
That would revolutionize those industries. The possibilities are incredible, and it's an exciting time to be following this space.
It is. But it's important to remember that the road to full autonomy won't be without its bumps. There will be challenges and setbacks along the way.
It's not a smooth path, but for investors who are patient, do their research, and believe in the long-term potential of this industry, the rewards could be significant.
I think you summed it up perfectly.
Well, that wraps up our look at Innoviz Technologies. We covered a lot of ground today, from their current financial position to the future of the entire autonomous vehicle industry. As always, we encourage you to do your own research and make informed investment decisions.
Absolutely. Remember, the best investment decisions are the ones that align with your individual goals and risk tolerance.
And stay informed, keep learning, and adapt to the ever-changing landscape of the financial markets.
Great advice. We'd love to hear your thoughts on Innoviz Technologies and the autonomous vehicle space. So subscribe to Investing Talk Podcast, share this episode with your friends, and leave us a comment, letting us know your perspective.
Until next time, happy investing.